All right, well, welcome and good afternoon, everyone. My name is Dawn Taguchi, and I am a 2006 graduate of Bucknell and the executive director of Open Discourse Coalition. We are a nonprofit in Lewisburg, and we bring a variety of intellectual viewpoints, including those on decentralized finance, to the Bucknell community. Uh, so with that, today we are kicking off what is a lead up to our October 5th hackathon. This will be our first hackathon at ODC, and we wanted to build up to it through a series of webinars and sessions to give you the opportunity to learn more about crypto and blockchain from alumni who are in that space. So I'm going to hand it over to Joe Quintillion. Joe is a 2003 graduate of Bucknell. He began his career as a futures trader at Pioneer Futures. He co-founded Axiom Markets, a proprietary energy trading firm, and co-founded Distributed Capital, Oasis Pro, and Ether Index, a cryptocurrency ETF. Joe is also a co-founder of Ajna, and the Ajna protocol is a non-custodial, peer-to-pool, permissionless lending, borrowing, and trading system that requires no governance or external price feeds to function. Joe has been a member of the board of Smith for 15 years and has also been running fundraisers for the Archdiocese of New York, and he is an advisory board member of Open Discourse Coalition. So, Joe, I'll hand it over to you.
Thank you, Dawn. Just an overview over the next 6 months. Today, we're going to go over the basics of crypto and kind of go a little bit in depth to programming, what's being expected of you, what's being expected of you over the next 6 months, and how we're going to be holding your hand as you go along the way, because this is a brand new thing at Bucknell. And we're going to have summer check-ins beginning in June, July, and August, September, to go over what you're learning along the way. So this will help you learn and go through all the different aspects of crypto. And leading up to October, we have a great hackathon where all of you compete against each other in teams to try to build a great product that people can use in Web3. In the beginning here, I just want to go through all the different people who are presenting today. So I'll leave it to Wes to give an overview of what he's done.
Thanks, Joe. Hi, guys. Wes Jameson, class of 2017. Prior to today, I spent time at RSM US, where I co-founded RSM's national blockchain team across audit, tax, and consulting. There, I designed our new client acceptance procedures, designed marketing materials, authored courses for the AI CPA and how to audit the blockchain, as well as helped choose preferred vendors for crypto tax accounting and audit procedures. After that, Joe actually convinced me away from RSM to join Oasis Pro as Vice President of Business Development and Growth. But with that, I'll turn it over to Grant.
Thanks, Wes. Hey, everyone. My name's Grant. I started my career in public accounting as a CPA working at PwC and EY. After that, I started a company called Taptive, and we're a growth agency for the Bitcoin economy. So we help companies in the Bitcoin space grow their protocols. I'm focused right now on working with the Stacks Foundation, helping to grow the Stacks protocol. And I'll pass it to Dave.
Thanks, Grant. David Marin, class of 2006. After Bucknell, I also went to finance. Initially, kind of landed on the right side of the global financial crisis by some luck. Thought I'd go into politics to help clean it up. Worked in Senate leadership in Washington, D.C. for a couple of years. After that, I decided I wanted to get back to business. So I worked as a management consultant at McKinsey for a number of years, ended up leading the tech diligences into a bunch of the decacorns in 2013-14 time period, which got me kind of exposed to and interested in tech. Shortly thereafter, found my way to crypto and blockchain, became obsessed, joined a company called Consensus in early 2018. Consensus is started its life as an Ethereum ecosystem building company. It was started by one of the founders of Ethereum in 2014 to help build the ecosystem around the nascent blockchain protocol. In those days, it was working more as an incubator evangelist. So I joined as an entrepreneur in residence to launch a decentralized venture investing platform. Through the volatility of the industry, have had a number of roles there. Was asked by the founder to help restructure it into an integrated software development company in the 2019 to 20 time period. After that, they asked me to build out a corporate development team, which is what I do today, is lead that team. So would love to kind of walk you guys through the high level of crypto and blockchain now, and then we can kind of get into some of the core products. So what is crypto and why does it matter? So I think it's probably helpful to start from the very beginning of crypto, which is Bitcoin, right? So Bitcoin was the first crypto asset. It was the culmination of decades of work into creating digital gold. It was able to do this via a fundamental breakthrough in computer science that created digital scarcity secured by decentralized consensus for the first time. The end result of this was the strongest form of property rights ever created by man, one that does not rely on intermediaries or the threat of violence to enforce. It was released during the global financial crisis and kind of came online towards the end of what Ray Dalio might call a debt supercycle, which has allowed this product to get quite a bit of traction in its relatively short life. Now, while Bitcoin is profound in its own right, digital gold was really just the first use case for this blockchain technology underpinning it. So on the next slide, in 2014, a young prodigy launched the Ethereum project, which aimed to broaden the Bitcoin protocol by creating general purpose property rights on the internet secured by that blockchain technology that Bitcoin had invented or pioneered. Now, it kind of further built on this technology by enabling full programmability of these digital assets, potentially creating a global settlement layer for the information age. Now, while Vitalik, the founder of Ethereum, had several use cases in mind at the time, the system was architected to enable commercial innovation and allow developer creativity to flourish. Hopefully enabling developers like yourselves to build a vision of the future bigger than anything he could imagine. So I'll quickly pass this over. That's very high level of kind of two major protocols. Pass over to Wes here to talk about some of the use cases that have taken hold thus far.
Yeah, thanks, David. So some of the use cases on Ethereum specifically that have taken hold have been brought about especially due to things such as smart contracts, which again are essentially if-then codified contracts. So if A happens, then do B, if not, do C. So this has allowed for things such as atomic swaps, or meaning like almost near instantaneous settlement of transactions, and also has also reduced the risk of counterparty fraud. And what we have seen for this is greater ability to transact and greater speeds. And we believe this will be a greater importance as things like AI are able to transact more directly with one another rather than person to person. We've seen a greater ability to transact cross-border, remit payments in almost near zero costs, as well as allowing for things like donations to refugee camps to be done in an easier, far more efficient manner. We're finding new ways to incentivize, create or design financial products or ecosystems, from sourcing things like real-time data and behaviors like getting people out to walk if it's like an app like StepIn, or even kind of creating new kind of frequencies of payments, like imagine getting your wages paid in real time rather than on a weekly, monthly, or quarterly basis if you're talking about dividends. We've seen things like artistic ownership across all media types be able to expand either through creations of new types of fan clubs, or create or collect royalties on secondary transactions. So artists are being able to live off of smaller percentage of sales, because those sales allow them to collect in perpetuity. New ways for sports and gaming fans to engage with ecosystems they enjoy. For instance, a lot of soccer teams in Europe, you're able to buy tokens that allow you to vote on the team's colors for a certain match, or a charity a team might support an upcoming game. We're also seeing things in real estate and property rights play out. So things like auto loans or home titles, those being on the blockchain, we're finding it easier to settle transactions and cut out middlemen like insurance agents, which charge a pretty hefty premium when it comes to selling a home or a car. With that, I'll turn it back to you, David.
Great. Thanks, Wes. So the popularity of some of these decentralized applications that Wes was alluding to has at times meaningfully degraded the user experience of Ethereum, causing some to even talk about things like negative network effects in the blockchain space. Now, the reason for this is it is quite hard to reconcile three critical properties of blockchain, right? One, that they be secure. Two, that they be decentralized. And three, that they be scalable, right? This is referred to as the scalability trilemma. And many researchers believe this to be impossible to solve. So the way the Ethereum network has gone about trying to scale the technology to enable it to serve 7 billion people on Earth and potentially an order of magnitude more autonomous agents and of sorts is through layer 2s. Right? Layer 2 rollups are effectively blockchains that settle onto the Ethereum mainnet, leveraging the security of that base layer. So this fractal scaling approach allows for effectively infinite block space, right, that remains secure and decentralized. Now, there are two main types of layer 2s that Ethereum is rolling out today. One are optimistic rollups, and the other are zero-knowledge rollups. Optimistic rollups are easier to build, right? So they were first to market. They've gotten more traction. This is why things like Base from the crypto exchange Coinbase launched an optimistic rollup. Very easy to build, but they're much harder, if not impossible, to perfect because they require a 7-day settlement period to ensure that they settle correctly onto mainnet Ethereum. A more technically interesting and possibly superior approach, which is much more difficult to build, are zero-knowledge rollups that potentially allow for instant settlement to mainnet Ethereum by leveraging bleeding-edge zero-knowledge cryptography. This is the approach that the founder of Ethereum, Vitalik, has endorsed. My company, Consensus, is currently building one of these zero-knowledge rollups alluded to here, Linea. It is viewed as likely the superior outcome. It's just much more difficult to roll out due to the more complex cryptography leverage, and will likely take time to fully perfect these, but that is likely the eventual end game. In the near term, though, there is much more traction on the optimistic rollup side. Now, earlier in the slide, I said that the scalability trilemma is potentially impossible to solve because not everyone necessarily believes that it is impossible to solve. And there are people taking alternative approaches beyond what we've seen in greater Ethereum. So cover a few of these on the next slide. So the first approach that I alluded to is a project called Solana. They are working to build a single integrated monolithic chain, not believing that effectively advances in computer hardware will allow them to solve the scalability trilemma. That said, this is not something that has been proven out yet. The chain routinely suffers from liveness failures and other things of that sort. Although the vision of this integrated chain that doesn't succumb to the scalability trilemma has attracted a number of high-quality developers to it, and some very interesting applications are being built there. Another interesting approach is that of Cosmos. Cosmos is actually the polar opposite extreme of Solana. They are going for a fully modular approach to blockchains. The challenge they have is that value accrual in this fully decentralized system has proven to be quite challenging, potentially undermining the security of that system, which has led people to start to try to find ways to kind of tie that security of Cosmos back to some of the larger, more secure chains like Ethereum or even Bitcoin, where we started, right? And we have seen a number of folks continue to try to build on Bitcoin. There also are layer twos on Bitcoin, like the project that Grant is involved in called Blockstack. That is earlier days due to the limitations in the scripting language of Bitcoin itself. It is more challenging to build layer twos on Bitcoin, and they have not been able to build fully secure layer twos. It's more of side chains right now, although it is an interesting avenue to explore. There are a lot of smart people working on trying to figure out how to build smart contract functionality on top of Bitcoin. That said, the reason we focused on Ethereum in the beginning, and likely will for the rest of this, is if you look at the level of traction out there, Ethereum has meaningfully more traction in terms of both developers and users than these other blockchains, right? So as you see in the top right corner of this chart on number of developers building on Ethereum, not only does it have by far the most developers building on it, but it also has the fastest growth of the most significant growth of developers building on it. Right? So largest and fastest growing. And then actually, if you zoom in on the lower left corner where much of the other blockchains are, you actually see that three of the four most significant growing developer ecosystems actually are just layer twos on Ethereum, like Optimism, Arbitrum, Polygon that we mentioned on the prior slide. Solana being the one exception up there that has gained meaningful interest in the developer community, although at a much different level of scale. So another thing worth flagging here, we're obviously not going to make any investment recommendations, but we do recommend people try to actually use these blockchains because there are a number of blockchains out there that are kind of more vaporware, that there isn't really much in the way of developer community or many projects to actually use. You can't actually use the technology. Whereas some of these ecosystems we're discussing, you can get out there and see and kind of play with the product, see how it works, and hopefully find a place that you can make a unique contribution to these ecosystems. Right. So this is kind of a very, very brief overview of the space. I think we could probably do the last 6 slides as part of a 6-course class at Bucknell. So we have some additional homework for you guys to try to get more up to speed. Can talk through some of that on the next slide here. First, we would recommend that you all read the Bitcoin white paper. It is a fairly concise write-up, accessible to non-technical audiences, that kind of will really help you understand kind of where this all came from, how it works at a high level. It is the most easy to understand system in the space. And so definitely recommend trying to figure that out at a high level. Once you've gotten through that paper, we would recommend Proof of Stake, a book written by Vitalik Buterin, the founder of Ethereum. Book is almost somewhat of a misnomer, although it is for sale on Amazon. It's actually a collection of his blog posts that he's written over the years. So another primary source material to kind of understand kind of the path and challenges and growth opportunities in the space. A third book we'd recommend is a book called Read, Write, Own, written by Chris Dixon, who's a partner at the venture capital firm Andreessen Horowitz. He gives a great high-level overview of the space, and he also talks about a number of areas where he would like to see entrepreneurs building things in the space. So if someday you would like to raise funding from venture capitalists to start your own blockchain startup, understanding how some VCs are looking at the space might be helpful as well. And then lastly, if you got time for extra credit, Kings of Crypto is a great story of kind of the birth of Coinbase, one of the largest and most successful crypto companies that has been built thus far. So now that we've kind of given you an overview of the ecosystem at a high level, right? And I can appreciate that's a lot in 10 minutes. I'll pass it over to Grant, who can kind of give you a high-level overview of how you can actually find places to start to engage tangibly with this technology once you've come to understand it.
Awesome. Thanks so much, Dave. Yeah, so I'm going to quickly talk about how you engage as a user. So the angle I'm coming at this is more about engaging with the community, so finding different people to talk to and learn from. So you can move to the next slide. So this is how to engage in the community. So an interesting part of crypto is first that it's a really new industry. The Bitcoin white paper came out about 15 years ago, so it is nascent, and this means that there's a lot of opportunity to engage with people who are building things. So a lot of this discussion happens online on social media. So there'll be Discord, Twitter conversations, Telegram groups, podcasts, and conferences. And you'll find that it's a really welcoming community with a lot of these protocols where they're open source protocols and they're looking to bring in new developers to help them build these protocols. So you'll find on Twitter/X, Discord, Telegram that the founders of these protocols and core contributors are really active and engaging with other developers, other community members, investors. It's kind of this collective community project to bring these protocols forward. So it makes for a really cool opportunity for everyone here to engage with people who are trying to work out these problems. And it makes it a little different than other industries where there's a lot of gatekeepers to get in the door. So our recommendation here is just try to get involved. We're building a list of interesting people to follow that you can check out and learn from them. But just overall, don't be afraid to engage with people in the community. And then the flip side of that is that on the next slide, because crypto is a bearer instrument, this means that once you send your tokens out of your wallet, which we're going to talk about in a minute, you cannot get them back. And this is the beauty of crypto. This is a core part of the innovation, but this means that there are a lot of potential for scams. If you send your money, you can't call up Chase Bank and ask them to reverse the transaction. Once it's gone out of your wallet, it is gone. So this does unfortunately attract some malicious actors. So this is just a warning here at the beginning, just to be careful of people scamming and trying to do phishing attempts to try to take the money out of your wallet. And then the other part of this is to be careful about some of these protocols doing more of a vaporware type protocol where they will try to bring in new users and extract money from them and dump the token. And this chart here is of the Luna Terra meltdown, which lost almost $60 billion in user funds. So again, going back to Dave's point, just to focus on some of the core protocols to start, and from there you can kind of gain traction and confidence. But this is more on the social side, starting to meet people in the community. I'm going to pass it to Dave to talk about the wallets, which are a really core part of interacting with this industry.
Thanks, Grant. So yeah, so Grant referenced wallets a couple of times. So we start by explaining kind of what they are. Basically, wallet is a core piece of software that the user is required in order to directly engage with any blockchain, right? Now, while people might call them wallets colloquially, since they can be thought of to hold assets, what they really are digital authority managers, right? They're how you exercise control over your assets, right? Signing to transfer one of these bearer assets that Grant was referencing to another user or to engage with a decentralized application of the sort we'll talk about shortly. But there are more than that. There are ways you can sign messages to people. There are ways you can log into websites. Like I said, they're probably better conceptualized as a self-sovereign digital authority manager. Now, I am a little bit biased as it's one of my company's products, but in the next couple slides, we'll talk you through MetaMask, which is the most widely used and flexible wallet globally. So it is likely the best place to start. Although there are a number of other companies out there that do make wallets like Coinbase. As we'll cover in a second, you do need to be careful about which wallet you use. So on the next slide, I'm going to run through some best practices to think about as you go about setting up your first wallet, right? So, one is we strongly recommend being very careful about what link you follow to install your wallet, which is why we kind of spell out the link here for accessing MetaMask, right? If the wallet you use doesn't do a good job of taking care of your private keys, making sure that only you have access to them, for instance, you could easily have your wallet drained. There are a lot of pitfalls to using potentially less secure wallets, right? So, that's one of the 4 competitive advantages of MetaMask, is that it has been out there for so long, people know that it's secure, right? So the second thing to keep in mind when you go to set up your first wallet is that you're going to need to secure a secret recovery phrase. So a secret recovery phrase is a list of 12 to 24 words that secures the keys in your wallet, right? It is important to understand that this phrase will allow you to restore your wallet if your computer crashes or anything like that, or you want to set up a new computer. But anyone who has access to that 12 to 24 word passphrase can set up your wallet on their computer, and then they can steal all of your funds. So it is important to keep it very secure. The level of security you go to likely depends on the value of the assets in your wallet. When you're getting started with small dollar values, you're probably fine just writing it on a piece of paper or putting it in a password manager. As your wallets someday hopefully get to be millions or tens of millions of dollars in value, you will likely want to go to much greater lengths to secure those assets in time. But important to be in a place when you're setting this up where you can securely write down and secure that secret recovery phrase. Third thing just to flag is that setting up a wallet is not enough. You are going to need to fund it with some assets in order to initiate transactions. So if you're initiating transactions on Ethereum or one of the layer 2s, you'll need ETH in that wallet. If you're setting up a Solana wallet, you'll need Sol. If you're setting up a Cosmos wallet, you'll need Atom. If you're setting up a Bitcoin wallet, you'll need Bitcoin, right? So you're going to have to fund it. A couple of ways to do this. One, there is a buy crypto button for convenience in MetaMask that you're welcome to use. You can also purchase that token in a centralized exchange like Coinbase or Robinhood and withdraw the asset to your MetaMask wallet at that time. But you are going to need some funds. So that's kind of just setting it up. Next page, I'm just going to quickly talk about what it's like to actually use a wallet. Look, I think a few things here worth flagging. One is you are likely going to need to enable different networks to use different applications, right? Activity has kind of fragmented a bit, as we were alluding to earlier, up to these layer 2s. Any layer 2s that you go to, for most of them, they're going to have to prompt you to install the network. When you go there, the decentralized application should prompt users to install it. Something to think about, as you build projects for the hackathon. And if you're going to use projects, things like Solana or Cosmos, and want to install the Solana or Cosmos snap into MetaMask, that should be prompted by the developer as well. Second thing to flag is, you have to be careful about what you're signing, right? Because once you authorize something, you've authorized it. And so it is helpful to try to read and hopefully try to understand what you are signing in MetaMask. Because if you think you're just authorizing to send one NFT or mint one NFT, you might be authorizing the smart contract on the other side of that transaction to pull all of the assets out of your wallet. And people have suffered from hacks like that. You've got to be a little careful. To that end, if you want to be extra careful, you can do things like disconnect from the site after when you're finished interacting with it. You can revoke access to smart contracts and things like revoke cache. This again, and I appreciate that is a lot that we've just covered in the last 5 minutes, just the nature of trying to give everyone a high level overview here. I strongly recommend that all of you go to MetaMask Learn and run through the very beginner friendly 30 to 60 minute overview of how to use MetaMask. It will cover all of these topics in much greater detail. It is very beginner friendly. Definitely recommend that you kind of run through spend the time to go through all of this. Again, just want to give you an initial very high level overview here of some of the things to keep in mind, but please definitely do run through this MetaMask Learn course. It's a great resource. So now that we've covered setting up a wallet so you're able to engage with decentralized applications, we should run through decentralized applications themselves. So these applications can be not only fun or informative like some Web2 applications, but they can also be quite remunerative. So I'm going to pass it back to Joe here to give you an example of how to earn tokens by engaging with these protocols as a user, before we then go deeper in on how to earn even more potentially as a developer. So Joe, all you.
Thanks. I'm just trying to navigate this freaking 1 second here. Go out of full screen mode here. All right, here back to the presentation. So along with just being long ETH or being long Bitcoin, like a lot of people have heard over the past years, you can also be a part of other projects and earn crypto and earn significant yields by participating. So most of the projects, like one project I created, Maker, Ajna, which is we're going to go over, we gave user incentives so people could quote unquote yield farm. So yield farm means if I participate in the protocol, I'll get extra rewards. So you'll see these different acronyms here. You see Aave, Compound, Maker, all lending, and Ajna, all lending protocols, Morpho too. And then over here you have SushiSwap and Uniswap, where they're trading protocols where if I deposit my crypto into them, people trade against it, and I'll get transaction fees, but also user rewards for participating. So you see this whole thing about Ajna. What is Ajna? Ajna allows you to borrow and lend against any ERC20, any NFT, and it's governance, oracleless. So it's easy for people to participate and just get involved. Now we're just starting. We started out in January, have about 25 million TVL. But in order for us to build up people to get involved, we created this. We allowed for yield farming to come in, and one way to get involved with Ajna is deposit into Ajna, either you're lending or borrowing, and you get to decide how much you want to risk when you're lending, so you can get possibly hurt if you're not if the crypto gets liquidated. So why don't I move on and show you the basics of everything here, and we'll get ourselves into Ajna here. What I'm going to do is I'm going to show you Etherscan here, where this will show you every transaction that goes on, that all the stuff that Dave was talking about on MetaMask. You can see everything that goes on right in Etherscan. So if I go to etherscan.io, I type in AJNA. It could be any other token. It could be compound maker, whatever, MKR, you type, he comes up Ajna. Give me a second here. Should come up. Here we go. You can see I have 598 holders, but you can see all the transfers of the Ajna token, which is great. But what I really care about is participating in the protocol. And ways you can do it is going into this contract tab. You can see the actual code of what we're going to be dealing with. Here you can read and write the contract. So if I really wanted to participate, I can connect via Web3, via MetaMask, which is this you can just see it. I'm trying to move that. So you can see this little fox up here. I can participate via MetaMask, and this will show my wallet here. Hopefully it shows up on here. You can see I have so much ETH in my wallet and so much Tether, and I had used USDC there, and I can go use this wallet to interact with the different smart contracts. Every time I run a call or run a smart contract on ETH or these L2s, it costs Ethereum mainnet is the main everything really runs on. And these L2s and these ZKs, it costs a little bit to run the protocol. So code efficiency is a big thing. So in order to show you how to yield farm, I'm going to go into a front end called Summerfy, and Summerfy gives you rewards for participating in the protocol, participating in Ajna. They have so much Ajna. We gave them. Let me just go and this one. Oh shit! Sorry. So if I want to participate in Ajna here, I can go and let's say put 0.03 in, and this will give me so much of a yield. So I'll get a 7-day APY of 6.8%. So that's pretty good compared to your bank at JP Morgan. So I can go, since I'm already connected through my wallet. You can see up here I'm connected through MetaMask. I'm on Ethereum. I can go to different layer 2s, but we're just using Ethereum, different L2s, but I'm going to participate via Ethereum, and I'm putting 0.03 of my ETH in and lending it out. So I hopefully will get people will borrow against it, and I'll get a nice return. So if I can go plus confirm down here, you'll see the MetaMask wallet transaction come up. Hopefully it shows up okay here. Hold on. Does it show up? All right. I am pressing confirm, and then you'll see the transaction come through here in a second. And you can go to my position, and now we're yield farming part of my ETH. You see this right here. How do you engage as a developer? Well, the big thing is to go to these ETH Global hackathons, and go to ETH Global has hackathon basically once a month, and there's one next week in Boston. There's a big one in ECC and in Paris. And DevCon is the once a year huge Ethereum hackathon. That's fantastic. That is going to be in Thailand this year. Year before was in Colombia. And it gives you a chance to participate, and you get to participate among founders, people who are basically billionaires sometimes, who are they're worried about coding. They're not worried about and participating in the community. They're not being uppity like you see some of these other financial firms like JP Morgan or Bank of America. You have to be, you get involved and help out. Another way to do that is on Twitter, Discord, Farcaster. Farcaster is really turning into a Ethereum community. So those are the different ways. I would say the next thing is, which I want to go over with you, is to go through your homework and how you guys can engage. The biggest thing is to go and start learning how all this works. So on this link, you're gonna see that you're going to see that this is like a 4-hour course where you're gonna go through, and I'm gonna participate with you. If you follow me on Twitter, you'll participate. I'll be going through each hour and saying what I liked and what I didn't like, and you guys can participate along the way. And then we'll have monthly meetups beginning in May that Don will facilitate, and we'll go through and say, okay, what are you guys learning? What do you guys don't understand? So it'll help you prepare for the hackathon in October. This one I think will be very, very useful because it's the basics from the beginning. And then if we go back to the other go back to presentation here. The next one is going to be on full stack development. This will help you build a dApp, which is a decentralized application for yourself. The next one is going through smart contract auditing. This is very important because you don't want to build an app or build a dApp that gets hacked. And I've had this happen to me on all different projects and investments I've done where the code's not that great, and then you get a hack and you have to redo it and you have to rebuild the trust of the community, and it takes a long time to do that. So better off to get it right the first time. Kind of like Bill Gruber's classes, it's rather right or wrong. That's why I was in investment banking when I was taking his class. And also I would say the Foundry course could be useful for yourself. One thing that would be fun for you once you learn along the way is this hack quest that we'll give you links to. You'll go through and test your knowledge as you prepare for the hackathon. We're going to skip over that, but what I'm going to do for that's your homework, and we'll have meetups that Don will facilitate along the way. And I want you guys to start thinking about teammates you can work with. One thing we'll definitely going to do for you guys is there's a hackathon prize for first, second, and third, and show that, if you write code, you'll be able to get paid for it. And if you enjoy doing that, there's also other ways you can get involved with Ethereum hackathons, and help grow the community. That's about it. Also, this is the page you want to go through. This will show you everything for you guys, what you guys need to do. Except the one thing we're missing here is we should have had download MetaMask so you guys know how to do it and learn how to use that. But all this could help you along the way. It's a lot of work, but we're going to be here along the way. Just follow me at JoeQ at Twitter. Follow Dave Marin. Follow Wes Jameson. Follow Grant Neasley. And yes, and Dave pointed out MetaMask Learn, and you'll be able to go and learn this along the way and really participate. And we really feel like this will be a great thing for you guys to participate in. And this is we're really focusing on for coding, not just like, oh, I bought some meme coin. This is a way, and this is a way you can make money long term and participate in the community. Yeah. So I'll leave it to Dawn from here.
Well, thank you guys, and thanks for everyone joining live, but also thanks. I know a lot of students are going to be catching up on this recording, probably after finals and after final projects. And so we'll ensure that you have access to information in these slides and contact info, and I will be in touch on future sessions so that you can have your questions answered from the experts in advance, and we can kind of learn together throughout the summer. So thank you guys, and we're really looking forward to continuing this program. Have a good afternoon.
Thank you.
Thanks, Tom.
Thanks.